Hello students, this is Dr. Kinnariben. The audio lecture is for main accounting students for semester 5 TIBCom. The subject is Advanced Accounting and Auditing, that is Management Accounting 1. We are going to study in this audio lecture the first chapter, that is Management Accountancy. The Management Accountancy consists 25% of weightage of total syllabus. In this chapter, we are going to study what do you mean by the management accounting, its definition, scopes, objectives, functions, tools, techniques, limitation of management accounting, installation of management accounting system, difference between management accounting and cost accounting. The another part are for nature and limitations of financial statements, essential of goods financial statements, analysis and interpretation, tools of financial analysis, methods, comparative financial statements, procedure for interpretation, objectives of analysis and interpretation, common size statements, trend analysis. The whole chapter is 25% of your total syllabus. The whole chapter is only theory. No practical sums are to be asked in the examination. In this audio lecture, however, we are going to study the what do you mean by the management accounting, its features, scopes, objectives and functions. The next audio lecture would be for tools and techniques, limitations of management accounting, how you are going to install management accounting system in your firm, or how a company would like to implement management accounting system in their accounting system, difference between management accounting and cost accounting. Now we all know that there are three main branches of accounting. However, in modern business we can say that there are 8 branches of accounting. I like to tell the students that please inquire what are the 8 accounting branches I am talking about. Now, if we think that what are the three branches of accounting, that is financial accounting, cost accounting and management accounting. We all know that the financial accounting is only the representation of financial activities of the firm which is already happened in financial year. Financial accountancy is a mandatory in most of the countries due to taxation purpose. However, the main limitation of financial accounting is that it only represents the historical or the past data without any analysis or interpretation. So in simple words, we can say that financial accounting shows only how much profit has been earned or what is the current financial status of the company, but it fails to reveal what are the reasons from which the profit is generated and why there is a current financial status of the company is so and so. Further, financial accounting does not interpret any financial data. It only gives the exact figures. Thus, the financial accounting does not help the top level management in decision making process. Further, the financial accounting reveals only historical data which cannot help a common person in investment decisions. Thus, financial accounting fails to assist a modern business organization in taking complex decisions of top level management. From above discussion, we can summarize the limitations of financial accounting, which gives the platform of the management accounting. Now we can summarize the main limitations of the financial accounting. The first limitation of the financial accounting is it only shows the historical data, the cost expenses that are already happened and that are irrelevant in future decision making process. The second one is the financial accounting is lack of controlling functions as it deals with only past data, not a current one. Further, the, fi- the format of the financial accounting is very rigid, and in most of the countries, it is already formulated by legal authority, which gives limited scopes for the analyzing the reports and interpretation. Due to above discussed limitations, the top level management cannot take any future decisions or which are exclusively based on financial accounting. For stakeholders such as potential investors, creditors, or any common man which may not have any knowledge of accountancy, for them financial accounting records are hard to understand. To overcome above mentioned limitations, management accountancy would become aid for the top level management as well as outsider stakeholders. Now we are going to discuss the concept of management accountancy. Management accountancy, as its name suggests, can be described as accountancy which would help the management of the company in its task, that is decision making process. Thus, management accountancy is a process of making reports about business operations that will assist management in making short term and long term decisions. It helps a business in realizing its goals by identifying, measuring, analyzing, interpreting, and communicating informations to all level of management. Different experts has given various definitions of management accounting. The report of Anglo-American Councils of Productivity 1950 has defined it as follows. Management accountancy is the presentation of accounting information in such a way as to assist the management in creation of policy and the day-to-day operation of an understanding. According to J. Beatty, a renowned author, has given the definition of management accounting. That is, it is the term used to describe the accounting methods, system, and techniques which, coupled with special knowledge and ability, assist management in its task and maximizing profit or minimizing losses. Robert Anthony says management accounting is concerned with accounting information which is useful to management. The term management accounting covers all those services by which the accounting department can assist the top management and other departments in formulation of policy, control of the execution, and appreciation effectiveness. Thus, the management accountancy is is a tool for managers in creation of policy, control, and execution and appreciation of effectiveness. The Institute of Cost and Works Accountant of India defined it as a system of collection and presentation of relevant economic information relating to an enterprise for planning, controlling, and decision making. American Accounting Association has defined the management accountancy as the application of appropriate techniques and concepts in processing historical and projected economic data of an entity to assist management in establishing plan for reasonable economic objectives and in making a rational decision with a view towards these objectives. Thus, in simple words, management accountancy is accountancy for management. The accountancy which helps the management in its tasks. The tasks of the management is a decision making process and takes or makes those decisions which realize the goals and objectives of the firm. Now, from this discussion, we can summarize the characteristics of the management accountancy. Now, we can summarize the first characteristics, that is, it is accounting for the management, which help them in decision making process. The second characteristics can be said that after financial accounting had done its works, that is that is the recording of the financial affairs of the company. The management accounting commences its works by preparing various reports on basis of the financial accounting. The management accountancy is a selective in nature. That means it does not consider all the information which are recorded by the financial accounting, but it selects only those information which are relevant to particular project or particular decision for preparing various types of resources, reports or analyzing them. Unlike financial accounting, management accounting focuses on future and prepares reports for potential project decisions. Management accounting gives series of solution or choices of particular decisions, but it cannot make decision itself. For those, the manual intelligence is required. It is helpful to inside stakeholders, that is management, promoters, employees, rather than outside stakeholders, that is shareholders and creditors. Unlike financial accounting, management accounting considers monetary as well as non-monetary variables in decision making process. For an example, the financial accounting does not consider opportunity cost. And opportunity cost is nothing but the cost for let go of best next alternative. However, in management accounting, with help of budgetary control or capital budgeting, each and every project must be evaluated on basis of opportunity costing. Further, we are going to discuss what is the scope of the management accounting. The scope of the management accounting is very broad. First point in the scope of the management accounting is financial accounting. The management accounting prepares various analytical reports after financial accounting ends its works of recording and of all information. So, financial accounting is commencing point for management accountancy. Second one is a cost accounting. Cost accountings play a key role in operation and control of business affairs through various cost control and analyzing techniques such as marginal costing, standard costing, differential and opportunity cost analysis, etc. Budgetary and budgetary control. Budgetary and budgetary control prepares various types of budgets which are guiding stars for executing projects. Inventory control is also an integral part of the management accountancy. Management accountancy also deals with inventory control, as inventory control consists essential cost element in total cost for the company. Further, with the rate of inflation and market fluctuation, it is essential that the account must be prepared on basis of replacement value of assets. The management accountancy, with the help of various tools and techniques, is assessing contemporary value of assets of the company. Further, management accountancy also help in interim reporting, a concurrent evaluation of a business affairs through self-check for business operations. For presentation and analytical purpose, various statistical techniques such as graphs, pictorial, index numbers, etc. are used by management accounting. Through this, the information are to be conveyed in more understanding and intelligible manner. Taxation has a direct impact on divisible profit. Hence, management accountancy analyzes the impact of taxation on its profits. For internal control, an internal audit must be carried out time to time by the firm. Management accountancy plays a vital role in internal control or internal audit by providing useful information from time to time.